All right, good evening, everyone. First off, thank you for joining us this evening. I would like to thank Tiger Brokers as well as Jen for joining us in this session. So, in today's topic, we'll be covering on riding market volatility with SGX listed instruments such as your ETFs as well as DLCs. All right, on to the key segment. On my end, I'm Raphael from CSOP Asset Management. Mainly, my company focuses on distributing and issuing ETFs across Hong Kong as well as Singapore as well. So today we'll be covering on a few key factors on market updates as well as ETFs, and last but not least, the S-REIT sector. All right, so understand that most of us here, year to date, we have been hampered by these current ongoing market conditions. Global major indices has fell quite sharply over the past few months. In fact, for Hong Kong side of things, over the course of the last week, we saw major declines. However, on a side note, interest rates are still rising. With the US side of things, we are seeing that despite the US Federal Reserve's effort to tame inflation with the interest rate hikes, in fact, their inflation figures have actually climbed last month. And during this period, we are likelihood to see another series of hikes coming in November. However, things may seem dimmed at this current juncture, but interest rates are still expected to peak at the later stage and slowly flatten out across 2023 and 2024. All right, so which boils down to my segment, I would like to touch on a bit on S-REITs and the yields on S-REITs versus our Singapore SGD overnight deposits. So for S-REITs itself, with the recent decline in the stock markets, S-REITs are also uh, being affected by such market declines as they are equities as well. So in this key factor, we can see that actually S-REITs, there are only few instances over the past 5 years that S-REITs have actually climbed over 6% in terms of yield. So first off, in 2017, it was the China and US trade tensions. And then back in 2020 March, during the COVID era, we see a sharp rise, or rather the sharp decline in the share prices of the S-REITs, which led to the increase of yield. And currently, we are also facing the same instances with the current ongoing market conditions. So while keeping this in mind, uh, these are some of the few instances over the past 5 years that investors that tends to look out for long-term strategy or rather building their income portfolio may want to keep a lookout during such times of occurrence in these current market conditions. Right, on Singapore side of things, as we can see, our GDP actually outperformed our global peers. It came in at 4.4% as compared to the 3.5% expected GDP growth. For MAS side, in the fight against inflation, the MAS has actually tightened Sing dollars. So with the tightening of the Sing dollars, we can see that actually Sing dollars has climbed quite a fair bit over the course of this year alone, versus our regional peers. And with this effect, it actually makes Singapore asset class a more ideal space for investors to park their funds at, as Sing dollars is being similarly seen as a safe haven asset class. On the Singapore employment side of things, unemployment rate actually fell to 1.9% overall. And in terms of for residents side of things, it actually fell to 2.7%. And this was actually much better than the pre-COVID era. However, the Ministry of Manpower had also warned that uh, if there will be potential weaknesses if economic conditions worsen ahead. While our economic grew, it was also thanks to the rise in visitors across this tourism segment side of things, and large scales of miscellaneous events have been happening, such as your F1, and ongoing currently we have the World Esports, the international, and we also see quite a few conventions such as a Switch week here in Singapore as well. We see a lot of our foreign counterparts are coming to Singapore for exhibition and giving all these conventions. So with this in mind, hospitality will tends to benefit from all this inflow of tourisms and the inflows of higher amount of conventions and events. All right, so quickly touch on why ETFs in such an environment may make sense. Right, so basically ETFs, or rather exchange traded funds, is a exchange traded tool, financial instrument that allows a group of securities or market segment or theme being basketed into one. So it also gives investors ease of access to underlyings that are listed on stock exchanges that may be purchased uh, on elsewhere. And such ETFs can also be purchased on margin or short sold. And also generally, exchange traded funds are passively managed, and they tend to have lesser expense ratios compared to actively managed funds. Plus, ETFs are definitely more often than not are cheaper than actively managed funds. So I want to touch on why CSOP S-REITs Leaders Index ETF. So with this ongoing current market condition, like I shared earlier on in my slides, that there are only few instances over the past 5 years that yields of S-REITs itself have actually breached the 6% mark. It may also give investors that are looking towards the longer term spectrum of investments may consider to add S-REITs into their investment portfolio. So for our CSOP IHS REITs Leaders Index ETF, on the contrary to compared to the traditional index ETFs, this particular ETF follows the IHS REITs Leaders Index, and the beauty of it comes from the methodology of this index. So the methodology of this index focuses on market daily traded velocity. So in a sense whereby when the stocks that are being traded on a daily basis, they have actually been recorded. And with that in mind, it will allow the index to be more accurately interpreted to the current market conditions. Why do I say so? Allow me to go to the next slide. So with this recent rebalancing update on the sector, we actually seen that retail side of things as well as the hospitality and office space have seen a rise in their new weight change. This was also taken into consideration that during that period that where the daily traded velocity is being assessed, the market actually realized that there may be potential going on in the market in terms of the office space, the retail, and the hospitality segment. So with that in mind, during its recent rebalancing in September, the index rebalance itself according to what's market conditions and the daily traded velocity of the underlyings itself. So hence representing a more accurate indication on the ongoing market. For the IHS REIT Leaders Index, first off, it comprises of 26 large and mid-cap underlying itself. So with this large and mid-cap underlying, they are more often than not a major proportion of it are government-linked companies, be it Temasek or GIC probably have stakes in them. And with that, usually more often than not, these companies have bigger market cap. They are able to acquire properties by raising enough equities, and it's easier for them to acquire businesses with their size. So I just want to bring an update on the sector breakdown with the recent rebalancing update. So for our IHS REITs Leaders Index ETF, the industrial side of things actually scaled down from the past, where it was above 40%. So this is also the interpretation of the market that the industrial side of things, they may see a slowdown in this segment due to global disruptions. And with the retail and office space increasing is a better representation of the current ongoing situations we are facing here in Singapore, when we see a higher take-up rate in terms of the office space, with the influx of more family offices, more financials and tech companies coming to Singapore, as well as for the retail side of things, it is also due to the increasing tourism that is coming to Singapore. The market expects that the retail side of things to do better. So the IHS REITs Leaders Index ETF actually is more of a proposition for individuals that have a longer spectrum or wants to build their investment portfolio for the longer spectrum to receive a stream of dividend payment. And for our IHS REIT Leaders Index, its geographic allocation focuses mainly on Singapore. So the highest two weightage is still industrial and data center. So with that in mind, the fees of this ETF is relatively low. It's currently at 0.5% per annum. It's capped at 0.6% per annum. So investors who wants to look out for higher yield at this current juncture and looks to build up their portfolio, the income generating portfolio for the longer spectrum side of things, with the ongoing this volatility in the market, can actually consider our ETF. And with that, I've come to the end of my slides, and Marcus from SocGen will present on some of the short-term strategies that you guys can undertake during such volatility in the market.
Hi everyone. Sorry, I think the sound volume had some issues. So I think you should be able to hear me now. Just want to quickly introduce myself. So I am Marcus from Society General. So we are the product issuer of the daily leverage certificates, or DLCs for short. So these are instruments that are listed on SGX market, where investors can buy and sell these DLCs using your regular stock brokerage account, the same kind of brokerage account that you use to trade your DBS shares or your UOB shares. You'll be able to find these DLCs on those accounts as well. All right, so let me quickly just share my screen and then we can start. Okay, so we are the product issuer of this daily leverage certificate, Society General. And just in a nutshell, the DLCs, they are a fixed leverage, a leverage product. So there are a leverage and a short-term trading product that investors can use to ride the market volatility that you've seen in the market in recent months. And it comes in the form of the two types of DLCs. One is a long DLC and a short DLC. All right. So that means that you can trade both directions of the market. You can either use the long DLC to ride if you are bullish on the market or the underlying asset, or if you are bearish and you think the price will drop for the underlying stock or index, then you can use the short DLC, right? Whatever it is, you either buy a long DLC or you buy a short DLC, all right, to express your view on the market. All right, so these are leverage instruments and it comes in the form of 2 times or 5 times or 7 times fixed daily leverage on the underlying daily performance, okay? So these DLCs are linked to an underlying asset, either index or a single stock, right? We have DLCs on a wide variety. We have over 250 DLCs listed on SGX. And this covers a wide range of underlyings, so across Singapore and Hong Kong market and the US market as well. All right, so we do have index DLCs that track your STI, your HSI, as well as your NASDAQ 100 index. Or we have a single stock DLCs that are on your usual DBS stock or Tencent stock, that you can use it to express your view on the underlying stock's daily performance. Right, as mentioned, these DLCs are traded on SGX. And Society General, we are the issuer as well as the designated market maker to provide continuous liquidity throughout the day for investors to buy and sell these DLCs. So you don't have to worry about that. We'll be there during the SGX market hours, 9 a.m. to 5 p.m. to provide liquidity on the DLCs. Okay, so this is the range of the DLCs that currently are listed on SGX, that we have listed on SGX. So we have listed this launched this DLC product range on SGX back in 2017. It's been 5 years since, and we have expanded the shelf year on year. So starting with index DLCs in 2017, we expanded to single stocks in 2018, and then now in 2022, we have launched DLCs on the US indices. So they're quite interesting. I'll share a bit more on that later. So we do cover a wide range of Hong Kong indices and stocks, Singapore indices and stocks, as well as the US indices, the S&P 500, Nasdaq 100, and the Dow Jones indices. All right. So wide range of underlyings for investors to choose from, and you can play both sides of the direction. You can either long or short the DLCs. You can either go long or go short on the underlying index or single stocks. All right. So this is the STI one that we just launched this year as well. So the STI is something that we are all familiar with, the FTSE Straits Times Index. So with this, people always say that the Singapore market is quite boring, the STI doesn't move much. But with these DLCs that gives you 2 times, 5 times, or 7 times fixed daily leverage, you can now get a bit more excitement in terms of the range, the trading range, because every 1% move on the STI index will translate into a 5% or 7%, 2%, 5%, or 7% move on the STI DLC, all right? So that makes it a bit more exciting within the day as well for you to trade the range. And these DLCs are coming in the form of both long and short directions, right? So you can see there is this CUGW is the stock code for the DLC. So this is the stock code for the 2 times long STI DLC. And then at the bottom of this table, you see CZGW. That's the 7 times short STI DLC. That's the stock code for it, CZGW. So if you go into your broker account, you go into Tiger Broker's account, for example, you type in CZGW, you should be able to retrieve this STI DLCs, all right? So you can see there's a long and short DLC for each leverage level. So if you are bullish on STI, you think it'll go up, then you will buy the long DLC. All right. If you are bearish on the underlying on STI index and you think it will fall, and then to profit from it, you would buy the short DLC. And that can in the form of CXGW, CYGW, or CZGW. Okay, whether you choose 2 times, 5 times, or 7 times leverage. Okay. And the other range that we just launched is very exciting as well is the US index DLCs. So this will give you exposure to the S&P 500 index, the Nasdaq 100 index, as well as the Dow Jones index. All right. So a lot to choose from. There is this, and we have 5 times and 7 times leverage on these indices as well for both long and short directions. So quite a long list over here. You can visit our website dlc.socgen.com to view all the DLCs that are listed. And you can find much more information about it on our website, and I'll show you the link later as well and some screenshots of the website. All right. So these S&P 500, these US indices DLCs are quite exciting because it gives investors the exposure to the US markets during Asian hours, right? So during Asian hours when the US market is closed, you can trade this US indices DLCs on the SGX market between 9 a.m. to 5 p.m. All right. So, it gives you the ability to hedge your positions if you want during Asian hours, or even to, get in early ahead of the US market open. Nowadays, the market, the futures, the US indices futures, they move quite a lot during Asian hours as well in recent times. So there's quite a bit of a nice trading range. So you can get in ahead of the US market open with these US indices as well. And you also are able to trade it. And because it's traded on SGX market, it's also traded in Singapore dollars. So you can enjoy the convenience of trading in Singapore dollars. You don't have to go and change your money to US dollars and have to change back after that if you're doing a short-term trade only. So these DLCs do offer you that convenience of being traded in SGD Singapore dollars as well. All right. So you have 5 times and 7 times to choose from for both long and short directions. And you can find the stock codes are the same as well. So all the stock codes are 4-character codes. You can key in, for example, CZFW on your Tiger Brokers account, and you'll be able to retrieve this Nasdaq 5 times long DLCs. All right. So these 3 key US indices for you to trade during Asian hours. But take note that these US indices are only traded during SGX market hours, and that's where they will track. It will be closely linked linked to the US E-mini futures during Asian hours, during SGX market hours, where the futures are traded. Therefore, we are able to track that futures with that 5 times performance. All right. So it's only traded during SGX market hours, and during the US overnight, these DLCs will not be traded. You cannot manage your positions on this US indices DLCs, but the US indices will still track that cash market, the spot index of the S&P 500, Nasdaq, overnight with that 5 times performance. All right. So this is something quite interesting on the US indices DLCs, giving you US market exposure during Asian hours. You can find out more on our website as well. We have a mini page on that. So if you can go to our website, you'll find that there is a US indices mini page for you to see, learn more about this US index DLCs. All right. So this is quite interesting. And for those of you who might be familiar with the US, trading the US market, you might have heard of the TQQQ or the SQQQ. These are the ProShares Ultra 3 times leverage and inverse ETFs on the Nasdaq 100 index. So these DLCs are exactly the same payoff as these TQQQ and SQQQ in the US, that's listed on the US. Exactly the same fixed daily leverage performance that you have on a daily basis, coast-to-coast basis. So exact same payoff as these LNI ETFs, just that we have it at 5 times and 7 times leverage, whereas those LNI ETFs in the US are only at 3 times leverage. Okay, so do check them out. The US indices DLC is something that we've launched quite recently this year, and I think the adoption has been great, and I think people are starting to see value in being able to gain exposure to the US markets during Asian hours. Okay, so you can find out more on our website. So as mentioned, during the Asian hours, during SGX market hours, the performance of the US US indices DLCs will be closely related to the E-mini futures performance. All right, so you give you that 5 times performance of that. Okay, so I've highlighted just a very quick one on what are our latest developments on the DLC, the STI 2 times, 5 times, and 7 times DLCs, as well as the US indices 5 times and 7 times leverage DLCs. All right. So for those who are new to the DLCs, this fixed daily leverage that we mentioned, that 2 times, 5 times, or 7 times, take note that it's on a close-to-close basis. All right. So the DLCs are designed to give you that fixed daily leverage on a close-to-close basis. So in this example here, for example, the STI is up by 2% on day 2 from the previous day. On a close-to-close basis, it's up by 2%. Then the 5 times long STI DLC will be up by times 5, 10%. All right. So the STI long DLC will be up by 10%, whereas the 5 times short STI DLC will be down by 10%. Similarly. All right. And the inverse is true. So if STI is instead down by 2% on day 2 versus day 1, then the 5 times long STI DLC will be down by 10%, while the 5 times short STI DLC will gain in value by 10%. So this happens every day on a close-to-close basis. The DLC will give you the daily performance, will use the leverage factor. So if it's a 5 times DLC, it will give you 5 times that of the daily performance of the underlying stock coin index on a close-to-close basis. Every day, this repeats every day. All right. So every day you will get that 5 times performance on a close-to-close basis. Okay, it's very important that if you trade the DLCs, that you understand this fixed daily leverage sort of payoff. It's the same as the LNI ETFs, which I just mentioned in the US. So every day you get that fixed leverage factor on a close-to-close basis. Okay, so that's the basics of DLCs. You can see over here on our website just a screenshot of the STI 7 times long DLC. The STI was up. This is during intraday, about noon time. The STI was up by about 1.3%. And see the STI DLC 7 times long STI DLC CWHW, which is priced around 80 cents. Most of the DLCs are priced between 20 cents to about $2. Okay, so within that range. So this 82 cents priced STI 7 times long DLC was up by 11.4%, right? So this is close to 7 times the performance of the underlying index performance. Okay, and similarly, the STI short was down, was in the rate because if the underlying goes up, then the STI short will go down, the value will go down, and conversely, if the STI index goes down, then the value of the 7 times short STI DLC CZGW should go up. Okay, so these DLCs are sort of short-term trading products. All right, so some of the common questions that we have is, how long can I hold the DLC, or how long should I hold the DLC, right? So these are short-term trading instruments, all right? So it's hard to define what is short term, but generally we can say that, we have seen people do day trading, intraday trades on this with 7 times leverage. Sometimes it can be quite enough in terms of the volatility. If the stock moves by 2% intraday, times by 7, if the index moves by 2% intraday, that times by 7, that's 14%, right? 14%, quite a decent return that you can generate within the intraday. So we do see quite a good amount of day trading, intraday trading on the DLCs. But we also see people who are willing to take more overnight risk, people who hold it overnight, or people who hold it for a few days or a few weeks. These are generally swing traders, or even people who are looking to hedge their positions, right? In terms of any short-term market correction by using the short DLCs. All right. So generally, we'll say that you can either trade it intraday for a few days or a few weeks, but definitely we do not recommend that you hold these DLCs for months at end, right? And much less so to please do not hold it for a year. Okay, so these are short-term trading instruments that you can use for day trading, swing trading, or for your hedging purposes by using the short DLCs. All right, so these are some examples. Day trading, the STI was up by 0.8% intraday during the day on this particular day on 7 June, while the 7 times long STI rose by 6.25%. Okay. And similarly, swing trading, STI, between 17 June to 29 June, that's about maybe 2 weeks or 1.5 weeks of trading days. The STI was up by 1.3%, while the 7 times long was up by 9.1% during the same period. Okay. And lastly, hedging purposes. So if you want to use it for hedging, you can use the short DLCs to hedge your exposure. So you're holding a big bag of Singapore blue chip stocks, etc., and you want to hedge against the short-term correction. The STI was down by 4% between 1st June and 16th June this year. During this short period of time, the 5 times short DLC CVGW was up by 24%. All right, so 4% times by 5 is 20%, right? Whereas the CVGW was up by 24%. That's 4% more than the leverage factor, right? So this is very important for investors to know as well. That DLC has that compounding effect feature where every day, you get that 5 times performance on a close-to-close basis every day. But over a period of time, if you hold it for overnight, if you hold it for a period of time like this, in this case, the compounding effect will kick in, right? Because every day your gains and losses are locked in. So in this case, the compounding effect works for the holders of the 5 times short because it was a nice trending market, trending down. And so the short DLC gained in value by 24%, an extra 4% compared to the 5 times 4, 20%, right? An additional 4% was generated on this 5 times short DLC due to the compounding effect, right? But the compounding effect can work for you or against you, right? It can work for you in a trending market, but it might work against you in a sideways market. So that's what we'll go through next in terms of what is the compounding effect, all right? So the compounding effect is important for investors to understand besides the fixed daily leverage. So the fixed daily leverage on a close-to-close basis 5 times, but if you hold it for a period of time, you have to be aware of the compounding effect. And it works for you in a trending market, but works against you in a sideways market. And it's best illustrated using this example over here. So you can see on the table on the left, that's where it's a nice trending market where the underlying is up by 1%, 2%, and 2% for 3 consecutive days. All right. So the DLC, every day you can see you get that 5 times performance. On day 1, you get that 5% because the underlying was up by 1%. A long DLC was up by 10% on the second day because the underlying was up by 2%, and again another 10% on the third day. So every day you get that 5 times performance. But overall, you can see that over the 3 days, the underlying was up by 5%, whereas the 5 times long DLC was up by 27%, right? 5% times 5 is 25%, but over here you generated 27%, extra 2%. That's because of the compounding effect. Your gains are locked in every day. Therefore, on the second and the third day, your 10% is based off a higher base. Okay, so that's why in a trending market where it goes up or it goes down depending on whether you buy the short DLC or long DLC, you can get the compounding effect where you can get sort of your gains are magnified more than that 5 times leverage performance. Okay, but where it can work against you is in a sideways market, in the volatile market. All right, so you can see in the table on the right, on day 1 the underlying is up by 2%, then down by 4%, then up by 7.31% on the third day. Overall, it's up by 5%, similar to what we illustrated in table 1. And so you can see in this case, every day you get that 5 times performance still because it's a 5 times long DLC. All right, you get 2% on the first day, so 10% on the DLC, minus 4% on the second day, so minus 20% on the DLC, and the last day 7.3%, so plus 37% on the DLC on day 3. On the close-to-close basis, it will always give you that 5 times performance, right? But overall, over the 3 days, this DLC is up by 20% only. All right, so 5% on the underlying times by 5 is 25%, but the DLC is only up by 20%, right? So that's less than the 5 times leverage performance. That is because of the compounding effect. Again, on the second day, your losses are locked in, right? The DLC fell to a lower value of 220, and therefore the gain on the third day, the plus 37%, is based off a lower base of 220. And so therefore, the gains is actually lesser than the 5 times performance. All right. So compounding effect can work for you or against you. It's important for you to understand that in that sense. Whether if you're holding it for a period of time, for longer than a day, on a close-to-close basis, you will get that 5 times performance or that 7 times performance based on the index, on the DLC. But then, if you hold it for a period of time, you have to be aware of how the compounding effect will affect your returns. All right. So that's also one of the reasons why we advise investors that they shouldn't be holding the DLCs for a long period of time. Over the short term, if you manage to capture a nice trend, that's great because that works the best for the DLCs. But in the long term, due to mean reversion, or you never know what might happen, in long term it can go up, but it can come back to the mean, etc. So in that case, you might not get that 5 times performance as promised of the DLC because of the compounding effect, right? The 5 times performance on the DLC is only on a close-to-close basis. Okay, so remember, these DLCs are short-term trading instruments, and you have to understand the fixed daily leverage and the compounded returns when you're using the DLCs. So it can work for you in a nice trading market. You'll make more than that 5 times performance, but in a volatile market, you could possibly make less than that 5 times performance or even register a loss. Okay. So this is some examples. This is we have DLCs on the Hong Kong stocks as well. So you can see during this period of 7 trading days, the JD.com was up by almost 8% during these 7 trading days, while the DLC was up. DJCW 5 times long JD DLC was up by 43%. So that's more than that 5 times performance. Whereas in a volatile market, this is the case of Xiaomi 5 times long DLC. The underlying is up by 9%. Whereas, the times by 5 is 45%, but the DLC DFQW is only up by 29%. This is over a period of 35 trading days. All right, so important to understand how the compounding effect can also work against you in a volatile market. All right, so this is a very quick comparison versus other products. I mean, there are many leverage products out there, but some of the differences are here. So the DLC compared to your CFDs, it's an exchange traded product. It's traded on the SGX securities market. You can access it through your Tiger Brokers account. Whereas CFD, you have to open a separate account with one of the CFD providers, and it's a margin product. All right, it's a margin product compared to CFD. Okay, and for the margin call as well, because CFD is a margin product, there's also the risk of a margin call where you could possibly lose more than your invested amount. Whereas for the DLC, the max you can lose is your investment amount. So if you put in $2,000 and you buy $2,000 worth of DLCs, for example, the max you can lose is that $2,000, even if the underlying moves adversely against you, right? So 5 times leverage, for example, even if the 5 times leverage, for example, the 5 times long DLC, if the underlying stock moves by 30% against you, right? It falls by 30%, crashes by 30%, times by 5 is 150%. Right? Whereas for this DLC, the max you can lose is only 100% of the amount. You will not be required to incur the loss for that 50%, extra 50% that theoretically should have been the loss if the underlying falls by 30%. Okay, so this is not a margin product. Therefore, we are able to cap the loss at 100% only. All right, and last one, time decay and implied volatility. So these DLCs, a lot of people confuse the DLCs with covered warrants or derivative warrants or options in a sense because it's leverage product. But other than the fact that they are leverage, but both leverage products, they are totally different products. DLCs are not options and they are not warrants. They do not have that optionality impact. They are not There's no exercise price. There is no in the money, at the money, out of the money concept. And there is no time decay and there's no implied volatility. All right. So these DLCs are not option type products. It is purely just the payoff is very much more similar to your leverage and inverse ETFs that you know of. So it's very much similar to that rather than anywhere close to the options or warrants. Okay, so do not confuse these DLCs with options or warrants. All right, so I'm coming close to the end. These DLCs are this is our website, dlc.socgen.com. So you can come to our website, dlc.socgen.com to view all the DLCs that are listed. Under products, you'll be able to find the search button to view all the DLCs that are listed, that we have listed on SGX Securities Market. There are about 260 of them. And you have seen the list just now. We cover over 60 underlying stocks and over 10 indices. Singapore, Hong Kong indices and single stocks, and then the US indices, the S&P 500, the NASDAQ 100, and the Dow Jones indices as well. Okay, so you come to our website and view. This is on our search page. Under products, you can see the search. You can look for the underlying, you can look for the type, either a long DLC or a short DLC. And you can look for the leverage factor you want, a 2 times, 5 times, or 7 times leverage. All right. So you can come here and look for them. And you can look for the star indicator as well. The star indicator will show you the most sensitive DLC. So this means that for this price, for a certain movement, which DLC will require the least amount of movement on the underlying stock for the DLC to move by 1 tick. All right. So this, if some of the DLCs, we have a few long DLCs at different issue price ranges, some different price ranges, some at $1, some at 20 cents. So these DLCs have different sensitivity, but they both still provide that 5 times performance on a close-to-close basis. All right. But we have made a most sensitive indicator for investors to look at. So if you're in doubt which one to choose between, like, say, 2 or 3 of the Alibaba long DLCs, look out for the star indicator. Okay. The star indicator would let you know which one is the ideal or the right DLC for you to express your view. You can also look at that. So you can see the star indicator for the most sensitive DLC. All right. And also do look out for the outstanding quantity. This means that how much of our inventory, how much of the units of this DLC have we sold into the market. If it's very high, it's around 90% or 80%, then it's best to avoid that. All right, because it might be sold out soon, and then if you want to add to your positions, etc., you might not be able to buy any more DLCs. So look for those that are low in terms of the outstanding quantity. Below 80% should be good. All right. So look out for the star indicator, the outstanding quantity, and then also the expiry date. All right. So all the DLCs have an expiry date. Usually they are long dated, about 1 year expiry, 2 years expiry, or 3 years expiry. But just to be clear, it is not meant for you to be buy and hold product. This is a short-term trading instrument. Remember that. So these DLCs, it will give you that 5 times performance all the way till the expiry date. All right. So you don't have to worry about that. It's not like options or like warrants where the time decay will accelerate towards the expiry, and then if whether it's in the money or out of the money at expiry, that concept doesn't apply to the DLCs. All right. The DLCs, you get 5 times performance on the underlying stock's daily performance or underlying index daily performance on a close-to-close basis, all the way from listing date all the way till expiry date. All right. So even if the DLC is, like, say, the remaining value or the value of the DLC on the day before the expiry, which is valuation date, is $2, then Socgen, as the issuer, we will cash settle the DLCs through CDP to investors. So you will receive the cash settlement amount, $2 per unit that you hold, through CDP, the same way that you actually receive your cash dividends for your stocks, etc. Okay. So they all have an expiry date, and it's long dated, 1 year, 2 year, 3 year. But remember that these are short-term trading instruments. Okay. And also on our website, you can find a price matrix, some tools that you can find that you are able to see how does the DLC move in line with the underlying stock's performance. So if the underlying moves to 30,000 level or 31,000 level, what is the price they can expect on the DLC? All right. So every DLC, we have the price matrix for you to refer to. So you can find it on our website as well. So you can find more information on education information on our website on how the DLCs work, FAQs, as well as videos as well on how to trade the DLCs. So do check them out. We have quite a lot of educational resources for you to choose to have a look. Please do visit our education website, tab on our website to just understand the DLCs, the features, and the common sort of pitfalls as well before you start trading the DLCs. If you're in doubt, please do call us on our hotline. We do have a hotline over here, 6226-2828. So please do reach out to us. My team and I are on standby during SGX market hours to answer any calls, any questions that you have, on the DLCs, and we're happy to give you a one-on-one as well, or a refresher on the DLCs. If you have any questions for us, so do look out for the hotline number on the front page of our homepage of our website. Okay, and also there are other tools that you can look for. We have the underlying charts for the underlying stocks or indices. We also have long short ratio to see who have been buying the short, who have been buying the long, how much is the percentage weightage between them, as well as the underlying stock flows. We do have the Singapore stock fund flows as well as the Hong Kong fund flows as well, to see which ones have the highest turnover change day on day, to see which ones are in play. So we do provide quite a lot of insights on the tools for you to have a look as well. So do explore our website, the products tab, the education tab, as well as the markets tab. All right. So that's all I have for the DLCs on this segment. So please do visit our website, dlc.socgen.com, to learn more about the DLCs, and do give us a call or drop us an email. There's a contact us form as well on the website if you have any questions on the DLCs at all. All right. If not, we are running a promo with Tiger now on the DLCs. So there is some reward that you can get whenever you trade the DLCs. So do look out for the Tiger promo as well in their app. So you can look at their Tiger app and then you just scroll around. I believe you should be able to find the DLC promotion as well. All right. So do look out for that. If not, just key in Tiger DLC promotion. I'm sure you'll be able to see it on your Google search page. Okay. All right. I'll leave the one on the. Let me see. I'll try and leave the website link on the page. Maybe not able to see it. All right. So I think that's all we have for this round. I think we want to just thank Tiger for organizing this seminar for us to share a bit more on what are some of the instruments, ETFs or DLCs that you can use that are listed on SGX, they can use to navigate the market volatility. All right. So whether is it having a buy a long only strategy, you can either dollar cost average in the ETF, or use certain ETFs to hedge, to diversify your exposure, your investment, or you can use the DLCs to even do a more active management sort of strategy, long short strategy, or even play with leverage to be able to hedge your positions, long short strategy. So whether you want to take a bit more of a passive approach or you want to take a more active approach, there are instruments that are listed on SGX securities market that you can readily tap on, as long as you fulfill all your broker requirements, etc. But please explore these ETFs that CSOP has listed on SGX, as well as the DLCs that SocGen has listed on SGX. And we hope that these tools will be able to be useful for investors out there to navigate the current market volatility. All right. Any questions? Please do send us your feedback. You have our contact channels that we've mentioned. So do let us know if you have any feedback, any kind of underlyings or any kind of new ETF you want to see. Please do reach out to either of us via the channel. All right. If not, Rafael, anything?
Nope, thanks. I would like to take this opportunity to thank Tiger Brokers as well as Society General for having us on this occasion. So a big thank you to all of you who have joined us here this evening. Hope you have learned one thing or another with regards to taking into the short-term or longer-term approach with the current ongoing market volatility. As I always believe that trading as well as investment, you have to take a long and a short-term approach to balance out your whole investment portfolio as a whole. And SGX do have the right tools for investors to invest in this current market as well. Right, just if you have any queries, feel free to reach out to our partner here at Tiger Brokers. They'll be more than willing to help you out to reach out to us.
All right. Okay. Thank you, everyone, and good evening.
Thank you.